FS technical trading in 2016, Australian dollar, US dollar, part 2. FS technical trading in 2016, Australian dollar, US dollar, part 2. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. The title of this video is FS Technical Trading in 2016, Australian dollar, US dollar, part 2. All right? On the 3rd of February 2016, I recorded the first part of this series of video, all right? And we gave traders 5 key support and resistance level. Those levels are 11024, 96 to 1. Now let's start again. 11024. That's the first key level. The second key level was 9668. The third key level was 8334, and the fourth key level was 7012, and the fifth key support and resistance level was 6327. All right. So if you are trading Australian dollar US dollar currency pair this year 2016, those are the 5 key essential support and resistance level that we must monitor. We are looking for high probability trading setup that are occurring near those key levels. Once we identify high probability trading setup in the vicinity of those key levels, we will now implement a top-down trading method to trade it. As we are applying a technical analysis, we must now combine the technical analysis with the fundamentals and economy news, checking the high impact economy news at www.forexfactory.com, the most important website for Forex traders. One cannot trade Forex without paying attention to the economy news. The economy news can change the dynamics of the technical trading. Very, very important. All right. So those are the 5 key levels. We note them down. We want to note them down. Okay. We don't want to forget them because we will make trading decisions, day trading, swing trading, position trading decisions around those key levels. Okay. We don't want to trade in the void, but we want to trade on near, high impact, most significant key support and resistance level. Very simple. Okay. Today, I want to share with traders 2 more key levels. The first key level is the long-term equilibrium price level that will remain in place throughout 2016. One cannot ignore the long-term equilibrium price level. The next key level that I will give to traders today is the short-term equilibrium price level. The long-term equilibrium price level is a valid key level throughout 1 year, throughout 2016 in this case, but the short-term equilibrium price level is dynamic, is changing constantly, and will remain in place for 2 weeks or so. Every other 2 weeks, very often, we will have a new short-term equilibrium price level. But the long-term equilibrium price level that I'm giving to traders today is the first long-term equilibrium price level for the Australian dollar, US dollar currency pair. That level will remain in place throughout 2016. But the short-term equilibrium price level that I will give to traders today will only be valid for 2 weeks or so. All right? After 2 weeks, we will have a new short-term equilibrium price level for the Australian dollar, US dollar currency pair. If you are a TST trader, you can always ask me if you are trading Forex. Please let me know what is the short-term equilibrium price level or the long-term equilibrium price level for this or that currency pair, and I will be happy, to give it to you. All right, you can contact me on my Gmail. Okay, it makes sense. All right, if you are a TST trader. All right. So the long-term equilibrium price level for the Australian dollar, US dollar currency pair is at the 7124. That's the pink line here on this chart. All right, it's the most important key level that traders and hedge fund, big financial institution, investment bank are watching. They will be giving priority to bullish signal above the long-term equilibrium price level, and they will be giving priority to bearish signal below the long-term equilibrium price level. In fact, the first long-term equilibrium price level is dividing the market, the price action, into two zones, the bullish zone above and the bearish trading zone below it. All right? So 7124, most important key level for Australian dollar, US dollar currency pair traders. Okay? All right? Very, very important. All right? As you can see here on this daily chart, on Friday, 26th of February, all right, which is 2 days ago, look, the price was here and it was going down. Where it stopped? It stopped near the long-term equilibrium price level. So on Monday, we will be monitoring, okay, the reaction of the price, okay, near, okay, this level of 7124. 7124. We wait for London to open at 8 a.m. London time, and then we will wait for the first 30-minute candle to close, and then we will monitor what is happening here, okay? Pay attention to the candlestick pattern, pay attention to the price action on here, the level of 7124. It is the long-term equilibrium price level. It's not by chance that the professional, okay, close this candle on the dot on 7124. All right? All right? The short-term equilibrium price level for the Australian dollar US dollar currency pair, by the way, this is the current short-term equilibrium price level because it's dynamic, it's changing all the time. After 2 weeks, we'll have a new one. But as I'm speaking to you today, the current short-term equilibrium price level for the Australian dollar US dollar currency pair is at a 7103. 7103. So now, apart from the first 5 key support and resistance level, we have 2 more key levels. So in total, we have 7 key level that we must monitor, watch the reaction of the price, look for high probability trading setup in the vicinity of those high impact support and resistance level. And if we find, okay, a high probability trading setup, we will implement a top-down trading method. If you are TSTW24 trader, once you see, okay, a bullish or bearish trading setup on or near those key level, you will switch to the first best time frame to take the signal on or near those key level on the first best time frame. Trading setup on a higher time frame for TSTW24 traders, signal an entry on the first best time frame. Okay? If you are TSTW008 trader, you are looking for trading setup on or near those key level, and then you will go to the signal time frame, wait for the signal, and then you will go to the entry time frame using the TSTW key 02 to enter the trade. If you have your own trading system, trading strategy, okay, you will look for trading setup, okay, around those key level, and then you apply your own trading system or your own trading strategy. Okay, it makes sense. So those are key levels 7124, 7103. These are 2 additional key support and resistance level. But the most important key level is the long-term equilibrium price level for the Australian dollar US dollar currency pair. We don't want to forget the pink line at a 7124. But for day trading and swing trading, the next 2 weeks or so, this is the current short-term equilibrium price level at 7103. Okay, so you can see that they are quite close. The difference is only 21 pip between the long-term and the short-term equilibrium price level. So this zone between 7124 and 7103 become a very, very important trading zone for day traders, swing traders, position traders, and long-term hedge fund forex traders. All right? There it is. All right? So, by the way, the equilibrium price level are not part of the TST trading tool. It's my own proprietary trading tool, okay? But I'm happy to share with traders, okay, for the Australian dollar US dollar currency pair, the long-term and the short-term equilibrium price level. Somewhere between August and September 2016, I will be giving to traders the second long-term equilibrium price level for the Australian dollar US dollar currency pair. Okay? All right? By the way, let's see. So we recorded the first part of this video on the 3rd of February 2016. That's where I put the vertical line here. Since then, what has happened? Because that time I gave to trader the level of 7012. When we were recording the video on the 3rd of February, we gave trader the level of 7012 as a key level. As you can see, the price went down. Okay, after the 3rd, we have the 4th. We see this candle here. Remember, whenever you see a bullish candle like this with a shadow on top, it's telling us that there are bearish orders here. So the following day, we will be monitoring the reaction of the price in the vicinity of the shadow of the bullish candle. So here we'll be looking for bearish, okay, chart pattern, bearish trading setup. Once we see a trading setup here, we will, okay, look for, okay, we will implement a top-down trading method without ignoring the economy news, the Forex, okay, economy news at www.forexfactory.com. Very important website for Forex traders or for those who want to trade Forex like a pro, okay? All right, you see, bullish candle with a shadow alerting us that there are selling orders here. The opposite is also true when we see a bearish candlestick, okay, at a support level, okay, bearish candlestick with okay, a tail. Okay, see here, bearish candlestick with a tail is also alerting us that there are orders to buy here. Now the following day we will monitor the reaction of the price, and then we will implement a top-down trading method to trade it. Without the top-down trading method, one cannot trade like a pro. All right, it's just like a gambling. If you are trading without the top-down trading method, it's set up on one time frame, the signal on another time frame, and the entry another time frame. At least use 2 times frame. But the most important thing is the trading setup. Have you found or do you have a high probability trading setup? All right, okay, it makes sense. It is also powerful. There is a video at Day Pro Trader YouTube channel where I was talking about, is it Day Pro Trader channel or Stock Traders channel? I was talking, check it on YouTube, high probability trading setup, okay? All right. I record a video where I show traders a few high probability trading setup, okay? All right. But very simple. If you want, I can give you one here. Very simple. What we usually look for a few trading setup, bearish trading setup, price D below a key level, must be a very important key level, and then retest it. All right. The following day, we will wait and monitor if we receive a sell signal here. All right. Or price breaks above a key level, okay, and then retest it. Okay. The following day, we will look for bullish signal in the vicinity of the key level. All right. When we receive the signal, we will take it. All right. Also, another trading setup that one can share with traders, sometimes along a bullish trend line, price D below the trend line, break below the trend line, and then was retesting here on the edge. This is a hot spot trading zone. If we see a bearish trading setup here, we will take it. The opposite is also true when we see a bearish trend line and the price breaks above the trend line and then retest it here. Okay, this is a bullish trend setup. We'll use a top-down trading method. But remember, the bottom line, we don't want to violate the market pattern. Is that sometimes the price will come out of the channel or we go above the trend line, but there will be a kind of a consolidation taking place above, okay, the trend line. Be aware of the market pattern. All right, the market pattern, very, very important. Do not violate the market pattern. It's one of the biggest trading mistakes. Do not ignore the economy news or do not violate the market environment. Those are, okay, the biggest trading mistake that we must endeavor to avoid at all costs, okay? Do not repeat the same mistake over and over and going around, okay? Though traders can use a technical indicator such as the CCI, the relative strength index indicator, or the stochastic or MACD. The price is the number one indicator. We must confirm all trading signal given by the technical indicator by the price itself, the number one indicator, which will give us a direct signal. All right? Okay, it makes sense? I just think that it's important I mention this here So traders may improve, okay, their trading strategy step by step. If you are a new trader, continue to learn, use a demo account, go one step at a time, okay, do not overtrade, concentrate only on high probability trading setup, and then, okay, if you have a losing trade, look at the trade, review the trade, and see what went wrong. That's how you will slowly but gradually, okay, build your trading, okay, skills, okay? All right, it makes sense? It is also powerful, all right? So this is it really for the FS technical trading in 2016, Australian dollar, US dollar currency pair. We have now 7 key level, 11024, 9668, 8334, 7012, 6327, 7124, 7103. All right, we must look for high probability trading setup around those key level, and when we find one, we will use the top-down trading method to trade it like a pro. As you can see, here we are. We have a scenario which I'm explaining to you. The price breaks above the short-term equilibrium price, the short-term equilibrium price level and the long-term equilibrium price level, because you can see they are quite close. It breaks above those key level. Now, this is what we are talking about. It's retesting it here. Okay, it's retesting it here. This is a bullish trade setup. Now, the following day, we'll monitor the reaction of the price in the vicinity of this level, 7124 and 7103. Wait for the market to open, wait for the first 30-minute candles to close, and then see it clearly. But as I explained to you, the price now breaks above those two key levels and retesting it here. There is also a consolidation. Are you seeing it? Okay, there is a small consolidation here. All right, small consolidation between the level of 7250, call it 7250, and this level here, 7124, which is the long-term equilibrium price. You see, it went up there, touch it, they slowed it down, okay, it came all the way here, but I want you to concentrate between the pink and the blue line here, 7250. There is a bigger horizontal channel between the 7250 and this level here at 7019, okay? So that is a consolidation in place. So remember, if this level fell, it means that the bigger channel is in place. The price may go to the next level, 7103. If it fell, we are back again to square one here, and we may see a kind of consolidation. If the market is becoming more bullish, which I think so, it's becoming bullish because we can see a lot of, okay, looking at the current market pattern, it's a rising channel, but the price just pop out of the blue channel. Can you see here? It pop out of the blue channel. So be aware that, okay, if it start going up here, all right, I want to draw the line for you so you may see. If it start going up for the pink line, be aware of the edge of this blue rising channel, okay? So you don't want to assume anything. You want to take it step by step, okay? And using, okay, find a trading setup. Now we have a bullish trade setup here. Will it be completely bullish? Okay, we will see. If it did below, so you may say, John, you say it's bullish, but if it goes below, okay, this is what we are talking about. If it breaks below the pink line, okay, and then retest it, then we have a bearish trade setup. The following day, we'll look for bearish trade setup, signal somewhere near the pink line. But right now, it breaks above it and retests it here. But if it comes back, and so on, okay? You get a message? All right. We wish you the very best in your FS trading. And until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about FS technical trading in 2016, Australian dollar, US dollar, okay, part 2. We recommend to traders to watch part 1 and part 2 so they may understand everything else. Happy trading to you all and speak to you soon.